most people can't get their hands around Bitcoin because it's an utter paradigm shift. And why is it a paradigm shift? Well, because I think Bitcoin is the first digital money. I mean, it's the first digital money. Gold wasn't digital money, and fiat's not digital money either. And so economists and politicians and investors, they all lack the right mental model to understand Bitcoin, because science and engineering were so intrinsic to gold that we took it for granted, because gold was it's a 10-pound lump of something. And if you get slugged in the head with it, nobody had to explain that science and physics mattered. And then science and engineering kind of became like quasi irrelevant in the fiat world. Everybody just kind of they ignored science and engineering, and there were no immediate clear consequences. There were just the hyperinflations and the collapses of those fiat systems. But because they abandoned gold and there was no digital money, the only alternative to one fiat, the Weimar Republic fiat currency, was the pound, and that alternative was an alternative to the next thing and the next thing. So we were comparing fiat currencies or fiat monies to each other. And so there was no real need to embrace science and engineering. And Bitcoin is this paradigm shift where we have digital money crashing into, I guess, what we'll call an analog money, or maybe a political money is a better way to describe it. And now we start to ask the question again, what is money? And I think tokenized energy isn't good enough to explain what is money. Another way to describe money is by coming back to the ideal model. What is the ideal model of money? Ideal money is a shared, immutable, correct ledger. You've heard the phrase, Bitcoin is a shared, immutable ledger, and people debate about whether it's truly immutable or not. But a crypto asset network, fully decentralized and mature, is the closest thing we can get to an immutable shared ledger in the history of the world. I think a lot of times when people describe it as a shared immutable ledger, they leave off the correct or the mathematically correct, because it's almost implied. But I think that if you were to focus upon the three critical dimensions of ideal money, you would say it's a ledger that's shared. Everybody in the political system has to have the same access to the ledger. It has to be immutable. No one can doctor it, but it has to be correct, mathematically complete, or mathematically proper, because if it's incomplete or incorrect, then it's not ideal money. So if I take that as a model, money is a shared, immutable, correct ledger, right? Then I can imagine the perfect money would be, some godlike being comes down on earth and they create this perfect, uncorruptible system, and they telepathically drop that shared, immutable, correct ledger into the heads of every human being. And every time you incur a debt, it updates the ledger. And when you incur a credit, it updates the ledger. And no one can corrupt the ledger.
This is getting right to the heart of property, right? Where it's essentially a list of who owns what. And that ownership is premised on what favors have you rendered to the market. Then you've earned some right to redeem favors from the market. And money is just kind of the ultimate form of property, and one that can be redeemed for any other form of property.
Yeah, I mean, a shared, immutable, correct ledger could be used to allocate ownership of all intellectual property. You kind of need it to keep track of your music rights or your video rights or your movie rights on your iTunes store. Mm-hmm. What do you own? Or the rights, registration and licenses. can I enter a building? Can I exit? Can I cross a border? What are my rights and what are my obligations and what do I own and what do I share? And it all comes down to just a shared database, but that database needs to be immutable and correct.
Yep.
And that is property, the essence of property. I suppose, when you own a piece of property and you buy it, a piece of land, 5 acres somewhere, then there's a deed and you go and you file the deed with the courthouse. And that's kind of critical, right? And so much of property law revolves around making sure that there are no liens on the property before I buy it, making sure that you have the proper title to it and that you can transfer that title. And I think that money, right, to your point, right, it's kind of like the apex property. It's the sum of all property, or at least it's the most important property, I suppose, because it would be the property that I could use to trade for any other property.
Exactly. Yeah.
Right. Any other property or any other product or service. Right. So
yeah,
that is my tokenized energy.
And what you're describing here, sorry, just one more thing is this movement of money out of the sphere of politics into an engineered standard. And if one definition of politics I really like is the discussion of how to apply coercion. So Bitcoin seems to be this type of money that's actually moving economics out of the sphere of politics into a more hard science. That seems to be part of this paradigm shift, is we've always thought money was in the domain of who could apply force, but now it's moving into the domain of what's scientifically proper.
Yeah, maybe we're moving from politically engineered money to scientifically engineered money.
Yeah, from social engineering to scientific engineering.
Yeah, is that money because the most important person in the village said it's money? Or is that money because the best engineer offered it as money?
Yes.
Satoshi engineered money, whereas every government has created money.
Yeah.
So if we start with that model, right, shared, immutable, correct, and now we go back to all the monetary systems in history. Start with ancient coins, right? Coin networks. Well, there have been so many coin networks, right? Starting with the Lydians. Each coin network is, well, I have a gold coin, I have a silver coin, I have a copper coin. Oftentimes there's 3 different coins, one for 1,000, one for 10, one for 1. They have to be at 3 different scales. And the shortcoming is, you create a system of coinage or custom tokens, and then you start shuffling them around in a network. You can only trade to the extent that you have those tokens. And if people lose the tokens, the money's gone, but then people try to counterfeit the tokens. They try to cut the coins different ways. Eventually the coins might wear down. The coins have to be carried. So why do all these coin systems fail? I guess on one hand, there's never enough of them, right? There's always a limit. On the other hand, they're discrete. So you can go from 1,000 to 100 to a 10, or from 1,000 to a 10 to a 1. But how do you get to a 0.1 or 0.01? When you want to get to, to orders of magnitude more, or you want to make change in the middle, you end up with all these money changers. And the result of the money changing is a huge amount of friction or impedance.